Hey everyone, just before this episode gets started, I just want to let everyone know that this is the end of Strip by Sia, Season 2. Season 3 is starting after a 1-week break, so next week you'll be getting a fun bonus episode of me guest lecturing at my alma mater, Simon Fraser University. And then we're kicking off Season 3 the week after that, so no breaks for me, no breaks ever. But I just want to let everyone know about that. Season 2 will be wrapping up, and Season 3 will be embarking real soon on April 25th. Also, we mentioned in this episode at the time of recording that I would be performing at Shaker's Show Lounge. That is not the case any longer. We are in our third lockdown here in Vancouver, Canada. So that is not a thing anymore in case you want to pop by. Anyways, enjoy the episode. Bye! Good morning, everyone. Welcome back to another episode of Strip by Sia, your podcast for strippers, sex workers, and all the fancy naked people in between. I am your host, Steph Sia, aka Kimchi on Stage. I am returning on stage actually when this episode is coming out, so be sure to catch me at Shaker's Show Lounge in Surrey. It's the only club that's open in BC right now for the time being. FYI, if you want to chat with me about sex work, that would be cool. But besides that, I am excited to bring on this super cool guest that I've connected with, and I actually took one of her financial literacy workshops not too long ago, which I found to be super helpful because I'm not the best. I mean, I'm okay at money, but I feel like it's such an intimidating topic, and I feel like an idiot when I try to talk and explain things. So instead of me trying to butcher the idea of trying to tell you guys how to manage your money, I am bringing on a guest. I am bringing on Jeanette, who is a licensed financial advisor, who's also a sex worker based in Toronto in Canada. And I am so excited to talk about this episode because tax season is right around the corner. So this is kind of perfect timing, especially if you were thinking about doing your taxes, maybe you haven't filed your taxes in a while. Listen up to this episode. We're going to get into it, so tune in for the next hour and a bit. Jeanette, are you there?
I'm here.
Welcome to the show.
Thank you, Sia.
So happy to have you on and for you to share your expertise, your knowledge on financial literacy and how important this topic is. So I feel like I did an okay introduction of yourself. Perhaps you want to go into about who you are, what you do, maybe give yourself your own fancy introduction.
All right. Okay. So I just first want to thank you, Sia, for giving me this opportunity to share my financial knowledge with you and your listeners.
You're welcome.
My name is Jeanette. So I am currently licensed as a financial advisor. I work for a financial brokerage. We find financial solutions for families and individuals. We advise them on debt management by working with debt settlement specialists on your behalf. Mm-hmm. We do home financing and refinancing, insurance, and investments. So the reason why I became an advisor is a good friend of mine encouraged me. We were outside of the club one night, having a smoke after I told her about my background in accounting.
Oh.
And yeah.
Okay.
So I used to file taxes for low-income individuals. So yeah, I particularly wanted the girls in the industry to become more educated and aware when making financial decisions. But I knew that if I was going to be giving financial advice, I should at least become licensed to do so. I mean, you're not going to take medical advice from some rando, right? Who's not qualified.
No, I really hope not.
Yeah.
So, I mean, that makes complete sense for sure. And as you said, like, we're not going to take some random advice from someone who isn't licensed. And, you know, if you have that knowledge and you already have that background too with accounting, if you already like numbers, and why not get that knowledge?
Right, exactly. It makes sense to me, you know, so, and I really enjoy it. So I think I'm right where I'm at.
That's excellent. And you mentioned you are a dancer as well?
Yes.
In the Toronto area.
Yes. So I began dancing when I was in my early 20s. And so I was at a friend's house for Thanksgiving, like 10, 15 years ago, and I had my daughter with me.
Mm-hmm.
She was less than a year at the time. So it was time for us to leave, and we waited for a ride, and we waited, and we waited.
Oh my gosh.
So I waited, yeah, we waited for that ride for like some time. And during the time, I just said to myself, like, I would never again depend on anyone else but myself.
Yeah.
So I started dancing and never looked back. And yeah, I've been dancing for over 10 years and love the financial freedom that it offered me during the time, because I was able to pay for my education and give my daughter a better opportunity than I would have been able to had I worked minimum wage.
Right.
Yeah.
Huge, huge, huge. Yeah, and I think you hit it right on the head there too. Like a lot of us sex workers, we like the financial freedom. We like to do whatever we want to do because basically it's like our own business, right?
Exactly. That's right.
Yeah, and money can give you a lot of freedom, a lot of power. It's great. Again, if you're working towards some goals or some kind of, like bigger picture kind of, or bigger picture kind of ticket items, like obviously you need money to do so. So
yeah, like I mean, people say it's a tombstone, and it's not. It's a stepping stone. You know what I mean? Not a tombstone when it comes to dancing. If you look at it from that aspect, right, and you're smart about it.
Absolutely, yeah. I love that perspective that you have in it too. Just it really is all about perspective, which is like a whole nother conversation. But like where your mindset is, how you're framing things. That's all. Kind of goes hand in hand in terms of like how you would then strategize and market yourself and, work on that hustle. So super cool. Thanks so much for sharing your story. Great motivation. I think I feel like this is going to be such a large episode and we're going to have lots and lots of stuff to talk about. So why don't we just go right into it? Let's talk about the importance of financial literacy. Let's get into it.
All right. So it's important just to know some simple concepts when it does come to financial literacy. For example, I talked about the rule of 72, which is basically if you take 72 and you divide it by your return on interest, it will tell you how long it's going to take for your money to double. So for instance, if you had a 4% ROI, invested like $10,000, let's say, it's going to take you 18 years for your money to double.
Oh, wow.
As opposed to a 12% ROI, it's going to take 6 years for your money to double. So do you see what I'm saying?
Right.
So a higher ROI, the less time it's going to take for your money to create income.
Right.
But look at what the banks give you, when you're saving your money, they give you like less than 1%.
Yeah.
So imagine 72 divided by 1. Like who has 72 years, to wait for their money to double? Like it's ridiculous.
Yeah.
Right.
No, I agree.
And then the credit card companies, they charge you like 19%. So look how long it takes for their money to double. They're doubling their money every like 3 years. So just like the rule of 72 could work in your favor, it could also work against you, right? So remember that.
I never thought about that.
Yeah.
What? Oh my gosh. Mind blown.
Yeah.
Yeah.
So another thing to think about, another concept is the time and cost of waiting. Like if you have somebody who's 20 years old and they have like 40 years to retire, it would cost them $150 a month, right? To retire by the time they're 65, they would be retired comfortably. A 40-year-old now with 20 to 25 years to retire, it would cost them $1,300 a month. And they probably wouldn't retire as comfortably as a 20-year-old only because they waited so long to start saving. Do you understand?
Oh, yeah. Yeah, definitely.
So I mean, the earlier you save, the better, because or as you get older, saving costs a lot more.
Right.
Yeah.
That is a huge thing too. It's because what, when you're younger, your parents are like, make sure you save your money. Make sure, you put some of that money away. And then you're like, oh, I've got loads of years.
Exactly.
Got some time.
But what you don't realize is that those loads of years that you have is working to your advantage. You know what I mean? So my daughter now, she's a teenager, and I tell her, hey, even if it's $50 a month right now, just put it away, just because I want to get her used to saving her money. That was one of the best advices that I got from a dancer when I was a baby stripper. She said, the best advice I have for you, girl, is save your money. And you know what? That's what I did. I saved my money. But the only thing, I was just saving it in like a low bearing interest account because I didn't understand that, the rule of 72, right? But now I do. So it's a whole nother game.
Yeah, and we're gonna get into like where you can put your money and stuff like that too later on in the show, actually pretty shortly. So because I know as we are both dancers. I mean, I also do some online work. I forgot to say this too. Like I have an OnlyFans. I make custom videos and stuff like that online.
Girl.
Yeah, busy girl. We gotta hustle,
I hear you. Trust me.
Hustle game is hard. I mean, if you don't hustle, then you're not gonna make as much money, which is fine. It just depends wherever you are in your life and whatever stage you're in. But as sex workers, I don't know about you, but I like to spend my money.
Yeah.
So savings can sometimes be a little bit hard, and I've definitely I'm guilty of having. I've had to pause my savings account. I've had to pause my contributions and stuff. Because it just goes in waves,
Yeah, I hear you. No, I hear you. Trust me. I feel ya. Yeah.
We've been there.
Yeah.
It's okay. And again, I'm just really opening up this conversation. And another reason why I want to bring you, Jeanette, onto the show is just because sometimes when we come into the conversation of money, sometimes there's a hush kind of quietness around it, and the stigma and shame, because sometimes people just don't know how to save, and that's okay. I just want to make sure that this is a safe space, and that the purpose of this episode is to help teach you different ways, and that you can do it and how important it is. So just want to throw that out there. But why don't we talk about as you mentioned, where you can kind of park your money, what can you do with your money? Because if you go to your bank, whether it's a credit union or just one of those big banks that we have here in Canada or anywhere else in the world, because this podcast is worldly, there are just so many different accounts. There's savings accounts, there's mutual funds, there's TFSAs, RSPs, bonds. Wow, it's honestly sometimes overwhelming.
Yeah.
And sometimes I just go to my financial advisor and I'm just do you have my best interest in mind?
And that's the thing when you go to the banks, because I've dealt with, I have my own home branch that I go to, I've been there for many years. And the funny thing is, anytime I go there and sit down with somebody, to talk about money and moving money and whatever, it's always somebody different. Yes. You know what I mean? And it's well, if my financial advisors are always changing on me, how are they going to have my best interest at heart? You know what I mean? So I guess I have to look after me, right?
Yes.
So, yeah, that's personal responsibility that does have something to do with it 100%. At the end of the day, too.
Yeah, 100%. As you said, I have had the same experience as you, where it's just a revolving door of financial advisors. I check my online account and it's a different name every single time I log in. And I'm just oh, okay, well, I mean, that to me is well, I don't know if they're just trying to get some kind of commission out of this or whatever. I don't really know how that works on that side, but...
Well, either way, wherever you're going to put your money, someone's going to make a commission on it. But it's just knowing if it's going to work out for you, right? So regardless of the commission, is what you're doing good for you? You know what I mean? So,
agreed. I guess, sorry, go ahead.
Go ahead.
No, you go ahead.
No, I was just going to talk about where to park your money, but if you had something to say.
Oh, yeah, no. Get into it. Yeah, go ahead and get into it.
Okay, so when you do grasp the concept of compound interest, you realize that your money needs to work for you just as hard as you work for it, right?
Yes.
So TFSAs, tax-free savings account, is tax-free on withdrawal, depending on your investments. So if you have stocks within your TFSA and it's made up of Canadian companies, you will not be taxed on that. But if you have any U.S. stocks now, you will be charged 15% taxes on that.
Oh,
so I don't know. Yeah, so
I didn't know that.
they don't tell you this.
No, yeah, I
Exactly.
didn't
They
know
don't tell you
that.
this. But that's the truth there. So a lot of times people will have like a bunch of different kind of stocks in their TFSAs, and they
Right.
won't know that, okay, some of these stocks are probably US stocks. And yeah, if there's any capital gains, you're going to be getting taxed on that, right?
Whoa. I did
Yeah.
not know
So
that.
so that's one thing. So that's a TFSA.
Yep.
An RRSP. So a lot of people will have mutual funds. I mentioned this during my tax workshop.
Yes.
A lot of people will have mutual funds in their RRSP, which is really not a good idea because, yeah, it's tax deferred, which means as your money is growing, you're not being taxed on that. But as soon as you withdraw that money now, right, you are taxed 100% upon withdrawal. So at the end of the day, you're like losing 40% on your money that you put into an RSP that holds mutual funds.
Oh.
So it's better if you have RSPs. It's good to have RSPs, but just know what you're investing in. So segregated funds as opposed to mutual funds, which have the same similarities, except for seg funds, they pay out like an insurance contract. So there's no tax consequences upon withdrawal.
Okay.
Right?
Okay.
So other types of, do you have something to say?
No, I'm just like digesting all this new information that like you can probably hear my voice like that's just coming out as a shocker because I was like, oh, I didn't know that. I'm gonna have to double check what kind of RSPs are like in my account.
Yeah, and you could always transfer your RSPs and put them and have seg funds into them. Like there's, I don't think there's a fee for that.
Okay.
I'm not sure, but I'll get back to you.
Yeah,
so
for sure.
Other types of investments you might want to think about are like par whole life and universal life plans, which is permanent life insurance.
Okay.
With an investment savings element and low premiums. So I think it's important because like seg funds, you're not taxed on the cash savings on this. Just like building a house, you must have a foundation, right? For your financial home to be indestructible. So the four pillars that people would have is they will invest in their physical home, but it doesn't really offer retirement. And like I said, you can't really depend on mutual or RSPs, especially if they're invested into mutual funds, because you lose 40% of your investment. An open or non-registered account will you'll pay 50% taxes on that. So you have taxable. So for instance, like if you're just investing into stocks or something like that, right?
Okay.
50% of your capital gains is going to get taxed. So your best option is an IRS account. So that would be like your whole life and your universal life plans and stuff like that. They give you 5 times more than what you saved. And I actually found out that we offer a wealth account with an emergency benefit built right into it.
Oh.
So, yeah. So that means that while you save and it happens that you have an emergency and you need money, you're covered. So so these 4 pillars, it's important just to save in all 4. So you have your house, you have your RSPs that are invested into seg funds, and then maybe you're investing some stocks, whatever, and then your IRS, right? So if you just have these things covered, then along the way, eventually you'll be fine.
You'll be fine. Yeah. Oh my gosh.
So it's just don't put all your eggs into one basket. You know what I mean? Don't just throw all your money into one savings account and that's it. Try to diversify it. They talk about diversification all the time anyways.
They do.
I'm sure you know about that.
They do talk about diversification. Oh my gosh, that was such a hard word. So early in the morning.
I can imagine. Yeah, I was saying that. What time is it for you guys?
It is 10:08. Well, which is actually not that early since I usually get up at 6:37, but I haven't had any coffee yet, so that's okay. Diversification. Diversification.
You got it.
Jeez, sound it out.
Diversification.
Diversification. They say this a lot with banks, and as you said, that just means parking your money in different places, as you said, and spreading it out, right?
Right.
Okay. Do you want to do a quick little tangent on that? Because I feel like that's also key. Or do you think we covered it?
So I mean, if you are going to invest your money in RSPs, bonds, GICs, and like cryptocurrency, you should also just understand the risks associated to these financial instruments.
Yeah.
So if you are buying a bond, right, know that you're buying a certificate of debt. So you're depending on the ability of the issuer to repay that debt. Also, you need to keep in mind inflation. So if your bond is receiving, let's say, a fixed rate of return, like you're getting 4% for your bond, and then, you're getting 3% for your bond, and then inflation goes up to 4%, you're getting a negative rate of return. So now you're losing money on that bond. Does that make sense?
That makes sense. And sorry, can you explain what a bond is again? Just because I feel if people are like me, I'm just like, what is a bond again? Like,
So a bond is like you're buying debt from the company. It's money that a corporation, or maybe even like Canada, they sell Canadian bonds and stuff like that. They owe debt, right? So you're buying that debt.
Oh.
Yeah. So you're just basically hoping that they're able to pay that debt back, and thus paying back your bond, right?
Right. What is the appeal for those who want to invest in bonds?
Well,
What's the
I guess
attraction?
because they get a fixed rate of income, or the fixed rate of return, but they just don't understand that, like all these things, like the risks that are associated to buying a bond. Like
Yeah.
I really wouldn't understand either, because whenever like I was looking at like GICs and stuff, I would look at like the rate of return, and I'm like, I'm putting my money for this long, and I'm only getting like 3-4%. I just didn't think it was worth it.
Yeah.
You know what I mean?
Yeah.
So because I could have, that interest I could have probably put in there myself and saved it. So I was like, yeah, I don't think it's worth it. So
Right. And that's kind of where I was getting at with that question too. Because I was like, what is the appeal for this? I mean, everyone has a different strategy on what they want to do with their money and how.
That's right.
Yeah. Like that to me is a bit too much risk personally. But hey, maybe if there's someone listening out there, this might be an option for you. So.
Exactly. That's right. If that's what they want to do, that's what they want to do. I mean, like people invest in crypto and cryptocurrency. And like, I mean, it went up. Like I remember in October, it
That's
was
so
like
hot right now.
yeah, it's ridiculous, right? But then as fast as it goes up, it can come down as well. So
Right.
it's very risky.
Very risky, and I feel like because there's so many emerging crypto currencies out there right now that like even my partner was thinking like, oh, maybe I should invest. I'm just like, well, maybe you should do your research first and not just jump on the bandwagon.
Exactly. You know what I'm saying? And it's very important to do your research, right? When it comes to money, who wants to lose money?
No one wants to lose money, right? Like I don't mind losing money if it's in the short term, and then in the long run, it's going to be a good thing. But like you have to really kind of be wise about it too. It's a gamble, literally gambling your own money. It's like you're at a casino. Right. So just depends. And you also mentioned stocks as well, and I feel like that's a whole other topic too. But did you quickly want to go into that? Because stocks are, I mean, a great way to invest your money. But again, you'd have to kind of do your research on that. Did you want to speak a little bit about that?
I have no problem. So I'll just speak on in terms of my own research and my own experience.
Yeah, absolutely.
So what I have experienced, because I was jumping on the bandwagon. Honestly, if anybody that had money to invest last year, if they knew what they were investing in, would have made money. Just straight out and simple. Unfortunately for me, I was just listening to people and buying like random stocks, even though I didn't have very much money at the time to do so, and I lost money, right? But what I found out that is, instead of just buying like one stock at a time, you could buy like a combination of stocks, which is called like ETFs.
Okay.
Right? So if you buy like an ETF, for instance, it'll hold Apple, It'll hold Amazon. It'll hold like Pinterest. Pinterest is a really good company that's on the come up right now.
Oh, okay.
Yeah, crowdfunding, all these different type of stocks, right, that you would individually invest in that is probably doing well. And you get that in an ETF.
What does
So you buy
ETF
that.
stand for again? Sorry to interrupt.
ETF is exchange trade fund.
Okay.
Yeah.
Gotcha. So it's kind of like a preset portfolio or something?
Exactly.
Gotcha.
Exactly.
Cool. And are you able to pick which ones that you were wanting to invest in, or do they already come preset?
Yeah, so it's just like a basket of a bunch of different stocks. So it does already come pre-selected. So if you go on, like, I have a Yahoo app that like tracks all these stocks or whatever.
Right.
So anytime I hear something, I'll just go on there and put in the stock ticker or whatever, and it'll give you all the information of the companies that come up, and then you could just purchase that stock if you have like a brokerage account, and you could just purchase that stock, and or that ETF rather.
Oh, wow.
And that's one way there. So I mean that, like, I just don't think, if you don't know very much about stocks, just purchasing individual stocks on their own is just not a good idea. And I am going to be honest, I'm not knowledgeable in that area. Not yet, right?
Not yet. Maybe you will be.
Yeah. Yeah.
That's interesting. Yeah, because there was like a lot of buzz that came up last year and the whole GameStop thing that happened too, with that being overhauled. But I mean, it's really, like, certainly really interesting. And I feel if I had enough interest there and to like gauge what all that meant, I feel like, I'd be comfortable investing, but I'm not as invested in stocks in general.
Yeah, well, I mean, that's where a financial advisor like myself comes in handy, because like it's on a personal level, right? So like, what do you want to do? What is your plans, and then I would guide you and educate you in that manner, right?
Absolutely. And going back to what you said there too, like, what are your goals? I think it's really important to have goals when it comes to money, and whether that is buying your first home, buying a car, retiring, or maybe you want to buy a house somewhere else or a vacation home. I think it's really important for anyone listening, not just sex workers, but just people in general. It's great to have a goal in mind. So when you have a goal in mind, you can then get a financial advisor like yourself, Jeanette, and then work on a strategy that can help get you there faster. I think it's so important. So with that, why don't we go into different ways to manage your money in terms of like different strategies or things that maybe have worked for you? Or what you would advise your clients.
Okay, so I'm just gonna talk about how we can protect our income first.
Okay.
So I mean, spending money is not hard, right? As it is as making the money.
Yes.
So like, I mean, out of our paycheck, we pay our living expenses, our debt, and our taxes, and then we're told to save 10%. But most of us, after paying our living expenses, debt, and taxes, are not really left with much.
Right.
Less even if we've spent what's left on clothes, shoes, and hair.
Yeah.
And believe me, I was guilty of this. I was always buying a new wig like every single month. Imagine if I just took that money and invested it every single month, right?
Oh my gosh. And they're not cheap either.
They're not. And you're always like trying to buy the most, the one with the most nicest hair, the nicest curl, the density of hair. It's like, and it just gets more expensive and stupid.
Yes. It's so necessary sometimes. Like, you want to look good.
Yeah. Like, I mean, it's not a bad thing to want to look good. We're women, right?
Yeah, and it's part of our job.
Right. That's right. Then that was the excuse I was making. Oh, yeah, I have to do it because, it's going to make me more money and whatever. So anyways, so like, we all want to retire comfortably, but like only 9% of us do so. And that's because the 9%, they have the financial education that 91% of the population are lacking.
Oh, okay.
So my brokerage, they want to change that with no family left behind. So we educate people on compound interest versus simple interest. right? So insurance as an investment and how to invest with principal guarantee.
Okay.
So if having a regular income is your biggest asset, and it is important to protect that asset. So I bring this up because people who work for an employer, if injured, their income is still supported by EI and disability benefits through the employer.
Right.
Most sex workers, if not, are all self-employed.
Yes.
So what do we do if, God forbid, we suffer from an injury, right? So Stats Canada says 1 out of 5 Canadians will suffer from a disability in their lifetime. Every job has risks. Ours is no different. Dancers are on our feet and in heels all day and night. Um, we do stage. There's risks if you're doing calls, even risks from webcamming.
Right.
Believe it or not, you can be online for so long that you suffer from eye strain. So how are you supposed to protect your income if you're injured and you can no longer work? EI is not going to help because you're self-employed. I mean, $50 monthly plans. If you're injured, you could submit a claim and your benefit will cover your expenses until you're able to work again.
Oh.
Like I've seen girls after being injured from stage return to work in foot braces just to make the injury worse, and it's like, that's not smart.
No.
And like, that's not a good look.
No.
So you protect your car, right?
Yeah. Yeah.
You protect your house. You have insurance for your house. Some people even have insurance for their credit card. So like, why wouldn't you protect yourself? Right?
Yeah. It's a no-brainer.
Yeah.
Total no-brainer.
That's right.
Yeah. So like, again, like what ways can we protect our money, and like how can we protect it? How can we save it
like
better?
I mentioned, you could start by getting disability insurance. You could invest in life, like I mentioned, the universal life policies, the PAR whole life policies. That protects your income as well as gives you death benefit. Right. So I mean, people with you need to understand, like, insurance, it's insurance, and a lot of the time people don't realize how badly they need it until it's too late.
Right.
You know what I'm saying? Like, I remember, like, it took me, when I was driving, for instance, another personal story. So I wasn't, like, I had my G1 and or my G2, and I would go around driving without insurance. And I got caught.
Oh,
twice.
Shit.
You know what I mean?
Oh, no.
So, yeah, and I paid that price, and it's like, it's better just to have insurance. And the reason why I got caught is because I got into an accident. Right. So had I had insurance, these things wouldn't happen. So it's just a good idea at the end of the day.
100%.
Like, just be smart about that. So
Absolutely.
That's how you protect your money, by insuring it. You know.
Good tips there. What about any strategies in terms of saving your money?
So I save my money in a TFSA right now. I'm moving a lot of it into segregated funds. So like there's very many ways that you could save your money. You could save it in, like I said, mentioned a TFSA and RRSP that holds seg funds. You could save it in a form of UL policies or whole life policies. Like, I mean, if you're investing, let's say over your lifetime, starting your 20s, and you're just putting away $150 a month for 20 years, by the time you're 40, that's it. You no longer have to put away any money. And after that time, you're pretty much good, because by the time you're 60, your money's doubled like 3-4 times, right?
Right.
So that's the whole idea of compound interest. When you're saving your money, make sure that you're getting compound interest and not simple interest, as opposed to what the banks are paying out. You put your money in a savings account, they're paying you on simple interest, less than 1%. You're never getting anywhere.
Right.
So,
right. And is this something that, that all banks offer in terms of, like, I guess it depends on what kind of portfolio you'd put your money in, I guess?
So, yeah. So, I mean, I don't know. People put their money in a TFSA. It could just be, you're just putting it in and saving it as cash. So I don't know what percentage of interest people would be receiving there. I would assume it's less than 2%.
Right.
But if they're putting it into a TFSA and it's made up of mutual funds, again, because that is what a TFSA is made up of, is mostly mutual funds.
Right.
Then like it's tax free still, but like it's not like an RSP. It's still tax free, but then you have to remember about, like I explained, with the American companies versus the Canadian companies.
Right.
So if you're putting it into a TFSA that holds mutual funds, yeah, you could get like a 6 to 7% rate of return, but then you have to, it's volatile, right? The markets are volatile. It goes up, it goes down.
Yeah.
So there's that you have to keep in mind.
That risk.
Yeah,
Right.
there's risk. There's risk everywhere.
Yes.
So what we do at our company is we give you like a financial assessment, and we see, like, where your risk assessment is at. So are you high risk? Do you want to invest aggressively, moderately? You know what I mean? So then we match your investments in terms of that.
Right.
So if
Whatever
somebody is a moderate investor, we're not going to put them in an aggressive investment.
Right.
Does that make sense?
That absolutely makes sense. Yeah.
When you go to the bank, they ask you all these questions. That's the reason why they do that.
Right. That makes sense. I can share a little bit too in terms of like what I do to save my money. So for me, I always like to have some kind of pre-authorized withdrawal that goes right into my savings accounts.
Right.
Because like if I don't see it in my account, I am not going to worry about it. You
Right,
know?
exactly. And that's a great idea, and that's basically how, I do it the same way too. I can't manually, well, I can, but I don't because I'll forget, so
Yeah.
I leave it up to the bank to just do the pre-authorized monthly withdrawal, like same with yourself.
Yeah.
So yeah, that's absolutely a great idea.
Yeah, I think that's really important. And I feel if anyone has a civilian job, or if there are some civilian listeners in here that have a corporate job or like some kind of civilian job that their company offers like RSP matching. I also did that with one of my past companies as well, because it's basically like free money. So basically you can put like a percentage, I think it's like a maximum of, depending on the company, 3 to 5% of your earnings per paycheck.
Right.
And then the company will then match it. And
Right.
it's just stuff that you can't touch. But as I said, it's free money,
Right.
which I think is beneficial. So, but not all companies obviously offer that, and especially if you're an independent contractor, as most of us are that are listening, it's a little bit harder to do that. So, yeah.
Right.
Yeah.
Yeah, because past retirees, they did often enjoy a combination of company pensions, Canadian pension plans, and their personal savings. But sooner or later, this traditional model is not going to be around for long.
Right.
So retirement strategies are now focused on personal responsibility.
Right.
So yeah, it is important to just have that monthly habit that I had talked about, and just putting your money away, on a monthly basis, whatever it is.
Yeah.
So you don't see it.
Better start saving, everyone.
Yeah. Yeah. If you're thinking about saving, like right now, do it today.
Yeah.
And call me. And
now.
Let me get you started. Yes.
But speaking of which, it's also tax season, and I wanted to also get into that topic as well, because sometimes there's a bit of like a stigma or apprehension about people doing their taxes. Maybe some people haven't done their taxes in the past couple of years too, and that's okay. But I just want to go into that topic because I think it's really, really important.
Yeah, absolutely. Let's do it. Many sex workers, I guess, they're apprehensive of filing taxes because most have no clue where to begin and what to include and not include.
Yes.
And perhaps another reason why they may be comfortable or not comfortable going to an accountant and having to explain what they do for a living.
Yes.
Right?
Yes.
So, like I mentioned, alternative industry codes that you can put on your T2125.
Right.
Such as personal care service or consultant, as opposed to the sex worker industry codes for dancers or for sex workers.
Right.
And I have full confidence that any of you can prepare your own taxes once you're familiar with what's involved. It's not hard. Right. I do have a full step-by-step guide if anyone listening is interested that is tailored to sex workers.
Oh, great. Yes, absolutely. Yes. We'll be sure to, if anyone wants to get in touch, we'll plug everything at the end of the show as well. So
perfect. So, things to include as expenses is anything that is needed to conduct your business, such as costumes, toys, makeup, hair, laptop, webcam for cam girls, condoms, nails, house fees, help, legal, accounting, advertisement, security, accommodation, car wash or repair. If you take a Uber or you have a personal driver, car rental fees, any auto payments,
Wow.
gas, meals, business taxes, like anything that's related to your business is what is considered a business expense.
Right. That's a
Yeah.
lot. You listed a lot there. That's just the tip of the iceberg. So,
Yeah.
and I feel like, maybe some of us just don't know that, or maybe not are not aware, especially if you've never filed your taxes before. These are things that you can claim
Yeah.
100%. So, there are tons of benefits in terms of doing our taxes too. I mean, especially in the Canadian context. Do you want to quickly go into that?
Yeah. So, I mean, like if you don't do your taxes, you could be missing out on money that's owed to you from the CRA. Like that's one major thing. I mean, anytime I do taxes, I get a refund.
Yeah.
So I looked forward to tax season, you know. But
Money.
yeah, exactly. You know, I'm doing my taxes, yay! So I'm gonna get money.
Mhm.
But you could also miss out on CPP benefits that will pose long-term ramifications. So these
Mhm.
contributions help you become eligible for retirement pension, even though it's really not much nowadays.
Right.
Disability benefits and survivor benefits. Other benefits that you could miss out on are Ontario sales tax, your Trillium benefits, and then for those of you with dependents, the child tax benefit, right? And
Right.
like CERB has forced many sex workers to realize how important it was to have our taxes up to date because, as you can
Yes.
all remember, if you didn't have your 2019 taxes filed, you didn't qualify.
Right. Yeah. And just a quick reminder for anyone just tuning into this episode right now, that's a new listener. I did a whole COVID series on this as well. So, and during the COVID-19 pandemic last year, the Canadian Emergency Response Benefit was like a $2,000 stipend that we'd get every single month for up to, I think it was 4 months in total,
Right,
that sex
right.
workers were allowed to receive. So it was a great benefit and also a huge help since a lot of us, weren't able to dance on stage anymore, weren't able to see our clients in person anymore. So
Yeah,
that
yeah,
income was like a lifesaver for me at
yeah.
least.
Yeah, for me too. Trust me, I was like going crazy because I wasn't then licensed, right? So I was just
Yeah.
working on becoming licensed. I was in limbo, you know, working on becoming licensed, and then all this happens, and then I was like, "Holy, what am I going to do?" Like, I had my emergency savings, but I didn't want to go through that,
Mm-hmm.
right?
Oh my
And
gosh.
even
Yes.
yeah, like, and if I had to, thank God I didn't. It would have been gone, like,
Just
you
like
know.
that.
Oh yeah.
Yeah.
So I was like thankful for that.
Yeah, and
Yeah.
anyone who did get CERB last year, and this again, sorry for anyone listening that's not Canadian, um, that is taxable.
Yeah.
So FYI, because it is tax season, and if you are intending to do your 2020 taxes, keep that in mind.
Oh,
So,
they'll remind you by sending you a slip. Believe me.
oh, have they?
Yeah, I got my slip like in
Oh
February.
yeah, no, I got
They
mine
should have.
too. Actually, yes.
Yeah.
I'm like, where is that?
Right.
Oh yes, that's correct.
Yeah. I know. I seen it. I was like, "What's this? 14th." Oh yeah. Okay. I remember.
You're like, oh yes.
Yeah.
Yeah, so I mean, as you said, like there are a lot of benefits to doing your taxes, and it's something that you should potentially look into. I think when people see forms in general, I just get like form anxiety.
Yeah.
Like it's like, oh my god, there's so many things that they're asking me for that I don't know what I should be writing in here and stuff. And I think that's where like a lot of that fear and the stigma, if I do something wrong, is a CRA going to be on my ass? You know?
Right.
Yeah. So, I mean, I think you mentioned you had like a step-by-step guide if you want to do like your own taxes with TurboTax or
Yeah,
whatever.
exactly. Yeah, and I think the download link that I have is actually free to do your taxes. So for anybody who is interested in wanting me to make that effort just to learn, how to do their own personal taxes, um, I could give them any advice that they'd like, and you guys can contact me.
For
I'll leave
sure.
my contact with Sia.
Yes, yes, we'll definitely plug that for sure. I guess perhaps, some people are not comfortable doing their own taxes. There's also the option of going to like an H&R Block or finding some other sex worker friendly accountant. What are your experiences with that?
When I started doing my own taxes, when I was like as a dancer, it was the same accountant for years. Um, I'm gonna be honest. I think I'm gonna probably just try to attempt to do my own taxes this year because it is like when I read the guide and then plus the background that I already had and doing individual taxes, I really do have confidence that I could just do my own taxes at this point. And
Yeah,
I want the practice as well because later on I do want to do help out other sex workers in doing their taxes, right? So
absolutely.
like yeah. So
Yeah.
I could help you. I could give you advice. But you could take your taxes to anybody. Like, I mean, what's their business? What you do for a living? You have your expenses, and this is how much you make. Here, do my taxes. I'm going to pay you. You
Yeah.
know what I mean? So, like I said, with the industry codes, you just okay, I'm a consultant or I'm a
Right.
personal care worker or whatever, right? So,
I like that better. And like I loved like when you said that during your workshop that I took, I was like, oh, this would make me feel a lot better.
yeah,
If it was my first time, because then I don't want to get the side eye from the person that's doing my taxes or for them to be like eyebrow
yeah,
raised. This is what you do
yeah.
for a living, and then have that weird kind of awkwardness and tension between you two. So yeah. I
Yeah.
think most people just want to avoid that potential conversation that could happen because it's not like something I want to talk about every day. I mean, for me, I'm really open about it. I really don't care. But some
Yeah,
people,
me too. I don't care
yeah,
anymore. Like I've gotten older. I'm like, you know what? No one else is paying my bills. I don't care. This is what I do, and it's like I said, it was a stepping stone for me, and it made my life a lot better. So,
yeah,
whatever, you know what I mean? Have your opinion. Like I
exactly.
really don't care anymore.
Yeah, I really don't give a shit.
Yeah.
There are actually a lot of questions in terms of like that came in from listeners that have to do with taxes and stuff. So I'm just going to go into that kind of Q&A because I think it's just related to the topic, and we'll just kind of lightly transition into this section of the show. So this question came from it seems like a non-sex worker, and I'm just going to kind of rephrase it a little bit. So a lot of their work is cash. Do they claim any of it? And I think it's an open and honest question. I can also kind of see where this person is coming from because
Right.
yeah, like in hospitality,
Right.
like as servers, we get like I'm also a server too. Like I get a lot of cash, or used to pre-pandemic times, and I like industry standard was to only claim 15% of it. So I guess this person's perhaps wondering how much do sex workers claim, or is there a percentage that they have to claim, or how would you answer this?
Well, how much would you claim in percentage if you were making a cash income? Ask yourself that. Would you claim 100% or, you know, if you want to claim 100%, go right ahead.
Yeah. It's really up to you. I mean, my only issue, and I'll speak on experience too, is yeah, like I'm just gonna go with my hospitality experience. As I said, the industry standard was 15%. And I had other jobs as well. So I was also dancing. I had a civilian job as well. The more you claim, the more taxes you're going to pay. And it's been a while since I've gotten a refund
Right.
because I am now like in that other tax tier.
Category, right?
Yeah. So
Which is not a bad thing,
not a
right?
bad thing.
But I get it. So honestly, like I think I mentioned before, if you're claiming less than $30,000, even if you own your own business, if you are claiming less than $30,000, you're not going to be taxed on that. As self-employed, you own your own business, but as soon as you go above that, you do have to claim like the GST. There's just no
Yes.
way around it. So if you want to buy a house and you're going to get a mortgage and you say, oh, well, I only make 25 grand, you're not gonna qualify
Yeah.
for a house, obviously, right?
Yeah.
So I can understand, like, like the dilemma there. But it's just really up to you. How much taxes do you want to pay?
Yeah.
um
Because it's always a shocker when that comes. I'm like, oh God. And that's why I have chosen to get an accountant, because I just had so much money coming from places. It's pre-pandemic times. I am like no longer making that kind of money anymore. But usually accountants are able to like work things around generally in your favor, depending on the relationship that you have with your accountant too.
right.
To kind of see like, okay, maybe we can
Like, you could get a lot of
play around the
write-offs, right?
numbers.
Depending on what you
Yes.
do. Like, I mean, you said you work in the hospitality industry, so I'm pretty sure there's write-offs there. As dancers, I mentioned all the different types of write-offs too. So,
Yes.
like, that would help you. But I mean, when you're in that bracket, you're in that bracket. Like that,
Yeah.
like it's Canada. Like, we pay taxes. We pay a lot of taxes, unfortunately. But that's
Yeah.
just how it is, to live in this great country.
Yes. And you pay taxes pretty much everywhere in the world. So
Everywhere, yeah, exactly. That's right.
it's just how it goes. This person is asking, is it wise to incorporate or to not incorporate?
So it is not a good idea to incorporate. I think during my tax session, I had mentioned that if you incorporate, you're going to be filing 4 times a year. So along with your own personal taxes, you also have to file for your corporation, because your corporation is a separate entity.
Yeah, exactly.
Yeah. So plus you have to like name directors and all this. Like, it's a lot of paperwork.
It's a lot of
mean,
work.
just make your money and dance and do your taxes once a year.
Yeah.
If you're making more than 30,000, then you do have to register your business and an HST number. If you're making less than 30,000, like I mentioned, you just straight file as self-employed. But if you want to file as a corporation, if you're making $200,000 or more, and you want to, like, maybe, because there is some tax breaks, right, on corporations, they don't pay as much taxes,
Right.
and just figure that way out, you can do that too. But like, I've never really gone there. I just stick with what I know.
I think it just depends, like what kind of business you are. Yeah, and like how much money you're making. I feel, I mean, I don't know how much this person is making, and this person is more in the lines like a full service, but yeah, it just really depends, because like when you incorporate, that is another entity, and like I always say it's wise to incorporate if there's a huge liability.
Right.
And that
right.
to me
exactly.
is what's
because
important.
then you protect yourself from any type of issues there.
Yes, exactly. So it just depends, but depending on the work you do and depending how much money you make, it's your call. But that's not something I see very common in general, I would say. But
right.
Yeah, and I think you kind of quickly you already kind of went over this previously, but if you want to add anything, you can. What kind of tax write-offs can sex workers get?
So I mentioned, like, I mean, you could write off your house, or sorry, your home office space. So if you're doing calls from home, you could write off like like the area that you're using, right?
Right.
There's a calculation for that, but I could always that's in the tax outline that I have. And then also your car, you could deduct your expenses from your car as well. And then there's and that's a percentage. So if you're traveling a certain kilometers to work or to and from customers, you would total that up, and then total up the total amount that you are traveling for the year, and you would divide the numbers by each other, and then whatever percentage that you get times the expenses of your auto. Hopefully that didn't sound confusing, but it really is that simple.
Okay. Is that in the outline that you can give as well? That calculation?
Yes.
Okay.
Yeah. I could provide that. I could provide that information to anybody.
That would be
Um,
awesome.
but you asked about write-offs. I did mention it, but did you want me to go a little bit slower this time?
Oh, no, I think in general, it's pretty much anything that you can use or that you use in
For
sex
your
work.
business.
Yeah, for your business specifically, right?
Yes,
So
exactly.
I think we're good. Like you mentioned a
Okay.
lot. It was a whole list. So
Yeah.
rewind back, listeners. This is a very specific question. I got a form saying I received more CERB than I did. What do I do?
Well, I guess
That's a good
you've got to
question.
call them and just show proof that you didn't. Like, I mean, they deposit the money straight into your account, right?
Mm-hmm.
Hopefully, like it wasn't a check that you got, but if they're just depositing the money in your account, just show them the proof that you didn't get as much as what they're claiming that you got.
Yeah, I would like screenshot your bank statements
Yeah.
with dates. If you can, you can definitely go scroll back for sure with your
Yeah,
bank
exactly.
and just provide them. But unfortunately, you're going to have to give this CRA a call, and their lines are
And
very
sit
busy.
there for 3 hours.
I was just gonna say, like, you're gonna be on the phone for minimum 3 to 4 hours because I've been through
Yeah.
this. My friends have
So
been through
prepare a
this.
meal.
Yeah, prepare a meal. Just like go for a walk.
You know?
Get some exercise. Put on
Right.
speakerphone. Yeah, sorry. Can you include deposits / checks written as gifts as income or / can you not claim that money?
So if you are getting gifts from clients, or sorry, money from clients as gifts, it's a gift. So you don't have to write that off. A gift is a gift.
Exactly.
Like if you didn't go somewhere and do a service, and they're giving you they're giving you money just for being beautiful. That's a gift.
Yeah.
Like,
Yeah, I agree. Like, yeah, that's to my understanding, it's a gift. It's not counting towards the income that you make. Same with
No.
any kind of like PayPal or online transfers and stuff like that. That's why it's really important for it to be written as a gift, plain and simple, so it doesn't get flagged. So
there you go.
yeah, another tip there. And last question. I feel like we kind of went over this already, but I think this person might have a confused accountant maybe, but she writes in, it seems like you can't write anything off that you use for sex work if you also use it outside of work as well. Her accountant said that she can't claim eyelashes, makeup, and outfits that can be used outside of sex workers as well. But she said you can claim rent, phone, etc. And why can't we do this for makeup and clothes? So
Sorry, see, I didn't mean to cut you off.
oh no, I was done. You go ahead.
Okay. So I've always take your receipts. Like that's why you have a section for supplies in your T2125. Like it gives you a list of where you're going to put your expenses, and I'm pretty sure one of them is supplies. So hair, nails, and makeup, I consider that as a supply. I cannot go to work without lashes. I cannot go to work without my wig. I cannot go to work without makeup on. Like it's simple as that. It all comes together. You know what I mean? As a dancer, so I'm writing that stuff off.
Right.
I don't know why you're like. How are you supposed to write off a percentage of what your Mac compact? Like,
Yeah.
it doesn't make any sense. It's a percentage, anyways, that's being written off.
Exactly. Yes.
So they're not taking everything that you claimed $15,000 worth of supplies, and then they're going to be like, okay, well, we're going to write off 15,000. No, it's a percentage of it.
Exactly. So I would double check with your accountant or do your own taxes for that.
Or find another accountant.
Yeah, because that sounds a little fishy. So, but that is the last question. Jeanette, before I let you go, where can we find you?
So you guys could email me actually at jadekolu@gmail.com. So I did write it in there on the chat.
Perfect. Yes.
I don't know if Sia wants to post it.
Yeah, I can definitely plug it
well.
in the show notes below. So if you did have any burning questions, you're more than welcome to contact Jeanette. She is a great resource, as you have all heard on this past hour.
Yeah, can I just say one more thing about
Absolutely.
a little bit about my business?
Sure.
So I just wanted to say, if anybody is looking to make extra income, I would suggest considering become a licensed financial advisor like myself. You do control your schedule, income, and you get tax write-offs on the money that you make. You're pretty much your own boss. Sounds like a business you're already familiar with. Hint, hint.
Yes, yes.
So we're a solution-driven company. We don't have our own products, but we're affiliated with over 70 product providers with the A-graded rating. This is not a skill-driven business. It takes thousands of hours to develop a skill and master it. It takes 10 hours to learn a system. So the financial brokerage I work for adopts a hybrid business model where everything is done for you in the structure of a corporation and a system of a franchise. So we're moving to becoming number one in financial distribution in the next few years. I'm currently building my own agency and
Oh,
would
yay.
love to have work with any of you who want to make more income. It is commission based, but with that comes overrides and residuals. Residuals, guys, that's money while you sleep. So the
Ooh,
money more,
yes.
yeah, the more money or the more business you submit, the more you make. What other square job do you know that pays residuals?
Yeah.
So
None.
trust me when I say 91% of the population is hungry for financial knowledge. So through education and awareness, you help improve other people's financial situation while improving yours at the same time. You do not need to be mobile to do this work because of COVID. Most of our business has gone online.
Oh,
So
good.
most of our meetings with clients are now done through Zoom. That means if you have a computer with internet connection, you is Gucci.
Awesome. And I think this is a great way too, is if you're looking the way, in terms of on the way out of sex work, or you want to transition, this is probably a good
That's
option.
right.
So lots of options there. And I'll definitely be plugging all this in the show notes below if you haven't checked it out already. But Jeanette, it was so great to have you on the show to share your financial expertise and knowledge with
Thank
the
you
audience.
so much, Sia.
You are so welcome. And I'm sure you're going to be getting lots of emails and questions because I feel like, as I said, like myself, a lot of us are just very unfamiliar. This is like unfamiliar territory. So I hope people will have some great takeaways from the episode. Everyone's going to go ahead and start saving money and filing their taxes this year. So
Yes, and contact me if you need any insurance or investments. I am the one.
yes. Certainly. And don't forget, it is new episodes every single Sunday. It's Stripped by Sia on Instagram or my personal Sia Steph. Don't forget to give me a like, rate, share, and subscribe. And I'd love to get some more reviews in Apple and more 5-star ratings. Thank you very much. And we'll catch everyone in for another brand new episode next Sunday. Take care, everyone. Bye.
Bye, Sia.
You're listening to Strip by Sia, hosted, produced, and edited by Steph Sia, artwork by Maria Bellandarama, music by Ted D, and photography by Ian Dabern.